The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Brief. U.S. President Donald Trump said the Federal Reserve would be better off cutting rates on the day the central bank kept rates unchanged. In a social media post from the U.S. leader, he cited U.S. tariffs starting to transform, or for him, ease their way into the economy. But Federal Reserve Chair Jerome Powell said earlier the Trump administration's initial policies, including extensive import tariffs, appear to have tilted the U.S. economy towards slower growth and at least temporarily higher inflation.
Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. We think that the right thing to do is to wait here for greater clarity about what the economy is doing. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high.
Well, U.S. Treasury Secretary Scott Bessent appeared to assuage economic concerns, saying there was no reason for the United States to see a recession. In an interview on Fox Business Network, Bessent said the underlying economy is doing better than the media is reporting. Top forecasters have marked down their expectations for growth this year, up the perceived risk of recession, and anticipate higher inflation as President Trump's stiff new tariffs on imports filter through global markets, with even broader levies anticipated next month.
What I can guarantee you is that there is no reason we need to have a recession. I think that there's the economy in the first quarter is doing better than the media is reporting. I think we're seeing some very good underlying data from credit card companies, from banks. I think that the airlines, which reported some bad passenger numbers, a big amount of that is from federal employees who are not flying right now. So the underlying economy is healthy. There is no reason we have to have a recession. Could we have a pause as we go from this incredible level of government spending, which is just unsustainable? You know, I said on the show, what I could guarantee was if we had kept going the way we were, we would have been in a financial crisis. And President Trump has put the brakes on this. We are going to get this spending under control. We are going to bring manufacturing back home, and we are going to make the country more affordable for working Americans.
Well, Asia shares were hobbled by weakness in Chinese markets Thursday and struggled to build on Wall Street's rally, even as investor sentiment was lifted by the prospect that the Federal Reserve could still deliver 2 rate cuts this year. Hong Kong stocks lost 1.5%, while the Shanghai Composite also slipped. That's after China's central bank also kept interest rates steady. Beijing is struggling to prop up growth and stabilize its currency amid mounting trade frictions. In South Korea, the benchmark Kospi picked up. Australia's ASX 200 traded 1% higher. Jakarta's stock exchange was able to recover about 1% after falling as much as 7.1% Tuesday. Indonesia's financial services regulator has allowed listed companies to buy back their stocks without shareholders' approval, while the central bank conducted bold currency intervention to calm markets. That's according to officials Wednesday.
The decision, I think, reflects what had been priced in by the markets, virtually a 0% chance of anything changing. And I think it's reflective of the way economists work. The Fed is very much known to be quantitative research driven. And what economists do to form consensus on fundamentals is they rely on signals that come from policy directions. And in this particular instance, they are waiting for the US government policy settings to settle down and then give direction, and that will determine what happens next. I think fears of recession are going to be lingering for a while. There's no doubt that OECD-type economies are linked to the fortunes of what happens globally. So for as long as there are dark clouds over global economic growth, then domestically there will be those fears, and they will be reflected in investment cycles, in inflation expectations, and general business confidence.
He is adamant that he's going to basically make America great again. So therefore, he is changing a lot of policies at the same time. I mean, those are big policies: immigration policies, trade policies, international policies, and fiscal policies. Usually you do one at a time in a sequential basis, and he's just doing all together. So therefore, he's quite optimistic with the words that when he says downward is because having that many shocks at one time, it disrupts the way the economy basically works and the financial market work. And
the White House said U.S. President Donald Trump and his Ukrainian counterpart Volodymyr Zelensky agreed to a partial ceasefire against energy between Russia and Ukraine. The agreement in a phone call on Wednesday came one day after Trump and Russian President Vladimir Putin agreed in their phone talks that the peace in Ukraine will, quote, begin with an energy and infrastructure ceasefire in Ukraine. A statement signed by U.S. Secretary of State Marco Rubio and National Security Advisor Mike Waltz showed the U.S. and Ukraine's technical teams will meet in Saudi Arabia in the coming days to discuss broadening the ceasefire to the Black Sea on the way to a full ceasefire in Ukraine. During the phone conversation, Zelensky asked for additional air defense systems, particularly Patriot missile systems, while Trump agreed to work with him to find what was available, particularly in Europe. Trump also discussed Ukraine's electrical supply and nuclear power plants with Zelensky and told the latter the United States could be very helpful in running those plants. American ownership of those plants would be the best protection for that infrastructure and support for Ukraine energy infrastructure, end quote. After speaking to Trump, Zelensky, one of the first steps towards fully ending the war could be ending strikes on energy and other civilian infrastructure.
Bringing people.
Conversation. The mood was right, sufficiently detailed. We discussed our next steps, the demands for partial ceasefire. We received signals from the American side that, most likely, it involves energy silence, meaning no strikes on the energy infrastructure of both countries, as well as civilian infrastructure. Here, I told President Trump that civil infrastructure is a very comprehensive concept. We agreed that we will do everything from our side to prepare a list of objects that we consider priorities and what we consider civilian infrastructure. This can include different types of infrastructure, such as railways. We will talk about port infrastructure. I don't know what our partners will confirm, but we will prepare for this meeting in Saudi Arabia. As for additional demands, I told you, no, first of all, I want to emphasize to you very honestly, the issue of territories will be the most difficult.
The White House statement on Wednesday did not mention that the partial ceasefire would apply to civilian infrastructure, as Zelensky suggested. The war in Gaza is sending economic shockwaves beyond the Middle East, with the Philippine trade and business sectors feeling the strain. Palestinian ambassador to the Philippines, Munir Anastas, warns that the prolonged instability is disrupting global supply chains and reducing trade volumes.
Palestine was depending on trade, and principally, for example, olive oil, dates, and stones as well, but also tourism. Tourism was one of the main
drivers of growth for the Palestinian economy.
And since the
religious tourism specifically,
principally religious tourism to Bethlehem, which is my city, actually. Unfortunately, it stopped completely, and all the industry related to tourism
took a hit
as well. It collapsed. So, how to recover? Recovering would never be possible without a political solution.
The Philippine economy, which relies on stable oil prices and secure trade routes, faces increased costs due to Middle East tensions. Navigating the uncertainty and rebuilding means Palestine will need to diversify supply sources and strengthen regional trade partnerships.
The Arab League proposed a reconstruction plan with a budget of $53 billion. And with having the population on the ground, without moving the population, and under the overall authority of the Palestinian National Authority, which means the government of the state of Palestine, who will ensure the security there. The plan was welcomed by many countries, and fortunately it was welcomed by major players in Europe, just like those who are close to Israel as well.
On Wednesday, the Israeli military said its forces resumed ground operations in the central and southern Gaza Strip as a second day of airstrikes killed at least 48 Palestinians. The renewed ground operations came a day after more than 400 Palestinians were killed in airstrikes in one of the deadliest episodes since the beginning of the conflict in October 2023, shattering a ceasefire that has largely held since January. From car sales to music revenues, an industry group reports subscription streaming boosted global recorded music revenues for a 10th straight year in 2024. The annual Global Music Report says subscriber numbers rose by 10% to 752 million worldwide. Revenues topped $20 billion for the first time in streaming, while physical formats fell by 3% to $4.8 billion after a strong 2023. While CD revenue fell, vinyl marked its 18th consecutive year of growth. We have to pause for a few reminders, but the biggest business stories from around the country and the market's closing data are up next. Keep it here on Business Brief, only on the Bilyonaryo News Channel. Welcome back to Business Brief. The lower house, TRICOM, is all set for its third probe on fake news this Friday. Overall Chairman Representative Dan Fernandez says disinformation is a national security issue. Fernandez adds social media must not be used to spread fake news and propaganda. Some lawmakers also say they must find out if the circulation of fake news is an organized effort and whoever funds it. They explain many Filipinos, overseas workers in particular, tend to fall for disinformation.
Napakarami talaga ngayon na lumalabas na mga fake news. Habang nagtitinik tayo ng ganitong mga cases, palala lalo na nung time ng arrest ni Duterte, nagpapakita ng napakaraming mga rallies, hindi naman pala yun dito, hindi naman pala dito sa Pilipinas. So, ang mga fake news umabot pa sa pag-iiba ng mga itsura or ng mga biktima ng mga extrajudicial killings.
Representative Fernandez also warns 11 social media personalities and vloggers they may be arrested and cited for contempt if they continue to skip the hearing. The online creators have repeatedly snubbed the hearings despite invitations from the lower house. The Philippines is facing a three-pronged attack from cyber attacks draining billions from the economy, fake news warping public opinion, and foreign incursions threatening sovereignty. On Follow the Money, Professor Victor Andres Manhit warned that disinformation is fueling political instability, especially after the arrest of former President Rodrigo Duterte by the ICC. Meanwhile, state-sponsored cyber attacks are costing the country 6.15 billion pesos daily. Foreign actors are using these digital wars to undermine Philippine territorial claims.
They have weaponized our social media. They're hacking our minds through disinformation, misinformation, and malign influence.
The Bangko Sentral ng Pilipinas may cut interest rates by up to 75 basis points this year as inflation cools and pressure builds to stimulate economic growth and global uncertainties. Finance Secretary Ralph Recto expects a 50 to 75 basis point rate cut following February's inflation drop to 2.1%, the lowest in nearly 3 years, and well within the government's 2 to 4% target range. He adds that the BSP could start easing as early as April 10, as lower borrowing costs would help drive consumption, investments, and overall economic momentum. Last month, the BSP kept its key rate steady at 5.75%, defying expectations amid lingering global risks, including U.S. monetary policy shifts, geopolitical tensions, and supply chain pressures. A rate cut would bring the Philippines in line with other central banks moving toward looser monetary policy aimed at sustaining growth while ensuring price stability. Markets will be watching how soon and how aggressively the BSP moves, as the decision will impact everything from business expansion to stock market sentiment and peso stability. Finance Secretary Ralph Recto reassures investors that the Philippines remains a safe haven for capital despite global volatility and local political headwinds. Speaking at an investment forum, Recto says investing in the Philippines is a strategic move as the country continues to be one of the fastest growing economies in the Asia-Pacific, even amid global challenges like trade wars, high inflation, and elevated interest rates. He downplays concerns over the recent arrest of former President Duterte, saying it is unlikely to disrupt the country's political and economic stability. He stresses that the fundamentals remain strong and unchanged. Recto points out that while the stock market experienced some volatility following Duterte's arrest, the peso actually appreciated on the same day, a sign that investors will still see strength in the country's economy. He adds that the government remains committed to economic reforms and policy continuity, ensuring that the Philippines remains an attractive destination for both local and foreign investments. The Philippines' balance of payments swings back to surplus in February, its highest in 5 months, but experts warn of persistent risks. The BSP data shows a $3.1 billion BOP surplus, a reversal from the $4 billion deficit in January. The surplus was driven by foreign currency deposits from the national government, global bond proceeds, and the BSP's foreign investment income. However, analysts note challenges remain. The cumulative BOP deficit stands at $992 million, higher than last year's level due to a widening trade deficit and foreign investment outflows. Despite this, the country's gross international reserves rose to $107.4 billion, providing a strong buffer equivalent to 7.4 months of imports. Economists say sustained dollar inflows from remittances, exports, and investments will be crucial to keeping the BOP stable in the months ahead. The government is fast-tracking regional development, green-lighting multi-billion peso projects to boost infrastructure and economic growth. The NEDA board has approved several initiatives, including the 56.7 billion peso Panahon ng Pagkilos Philippine Community Resilience Project, or PCRP. Backed by the World Bank, this massive program aims to benefit over 4 million households in 500 municipalities by strengthening local infrastructure and creating sustainable economic opportunities. NEDA Secretary Arsenio Balisacan, who vice chairs the board, says these projects reflect the government's push for inclusive growth, ensuring that economic development reaches communities beyond Metro Manila. Apex Mining is striking gold, posting a 28% surge in consolidated net income to 4.3 billion pesos in 2024. The boost comes despite operational challenges, including a 5-month slowdown due to a landslide. Revenues jumped 25% to 15.1 billion pesos, driven by increased gold and silver output at its Mako and Cignal mines. Total Mako mine production hit almost 900,000 tons, while Cignal produced over 148,000 tons. The rally in global gold prices averaging $2,436 per ounce and a stronger dollar at 57.45 to the greenback also worked in Apex's favor. The company's mine reserves swelled 72%, extending Mako Mine's lifespan by at least a decade. CEO Luis Sarmiento credits the workforce's resilience, saying Apex is now producing more gold than ever before. Philippine shares continue to rally Thursday, posting a second day of gains. The main index stayed in the 6,300 level, even as the all shares counter dipped. Advancers edged out decliners 103 to 98, with value turnover a hefty 5.6 billion pesos. Mining and oil surged better than 6%, with Apex Mining advancing over 5% on its stellar earnings report and Philex Mining grabbing over 11%. Meanwhile, at the foreign exchange market, the peso is currently trading at 57 pesos and 16 centavos to the US dollar, stronger than Wednesday's close of 57.30. Policy shifts from Washington are shaping the outlook for Philippine trade and investments, with the Fed maintaining interest rates in a dovish hold and signaling future cuts. Filipino investors are eyeing a potential boost in capital inflows and lower borrowing costs.
It depends to be seen because there's a lot of liquidity right now, but it's all in the short end. So market is pretty much in the duration fear still. They are still on the safe side of things, so they would like to invest in the treasury bills. So if you look at the bid to cover ratio on the recent treasury bill auctions, it's pretty large. Mm-hmm. So everyone is loaded with cash, but they just are not yet trickling down the yield curve because of possible uncertainties with regards to the tariffs and uncertainties with regards to Trump and, of course, policy uncertainties.
And that's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News Channel, always on time.
The Philippine automotive industry is still cruising at the full speed, with car sales hitting 76,768 units year-to-date, up 6% from the 72,132 vehicles sold during the same period last year. A joint report by the Chamber of Automotive Manufacturers of the Philippines, Inc. or CAMPI and the Truck Manufacturers Association shows a notable 13% increase in commercial vehicle sales, totaling 60,885 units sold. However, passenger car sales saw a dip, down 12% with 15,883 units sold compared to 18,129 in February 2024. New energy vehicles, which were included in the report for the first time in January, have made a strong debut, with sales reaching 3,416 units, or close to 6% in market share. Among them, hybrids led the charge, though plug-in hybrids experienced a significant boost month-on-month, selling 38 units in February compared to just 9 in January. Campi attributes the positive sales trend to a variety of factors, including a stable supply chain, rising demand for electric and autonomous vehicles, and favorable global economic conditions. Consumers are also showing a growing preference for connected, personalized driving experiences, with an increasing shift toward electrified mobility. These trends, combined with ongoing technological advancements, are expected to keep sales revving through 2025. Toyota, led by the Bilyonaryo T family, remains firmly in the driver's seat, holding a commanding 48% market share. For BNC Mobility, G. Baroga.